Hello and welcome to this video on next week's ECB and Fed meetings. Most ECB officials are talking about raising interest rates further. Anything else than another 25 basis points rate hike in the deposit rate to 3.5% would be a huge surprise. Probably that would be the last rate hike in this cycle. First, inflation in the Eurozone has already fallen from over 10% in the autumn to 6.1% recently. Core inflation fell for the first time in a long time. Second, the economy is increasingly weakening. Third, ECB Council member already considered a deposit rate of 3.5% to be high compared to a neutral rate of 2%. The futures market are pricing in ECB interest rate cuts for 2024. But underlying inflation, that means core inflation excluding energy and food, is unlikely to fall back to 2% in 2024. This is because wages are rising faster and faster, pushing up the prices of services. Inflation has eaten into the economy. That is why the ECB is unlikely to cut interest rates in 2024. Regarding next week's Fed meeting, the forecast is less clear than that for the ECB. The Fed statement from the last press conference can be interpreted as saying that no further rate move is expected on Thursday. The designated vice chairman of the Fed suggested a pause for next week. We therefore do not expect another rate hike. In both the US and the euro area, the inflation problem will not disappear in 2024. But the Fed has raised its interest rate to 5.25%, much more than the ECB. In this respect, it has room to cut. We expect the Fed to lower its rates by 1 percentage point in the course of next year. Interest rate hikes are coming to an end with a view to the ECB and the Fed is even likely to cut its rates in 2024. All this suggests that the yield on 10-year bonds will also fall in the second half of this year.